Good Friday evening, folks. We're going to look at a story by the New Yorker. This was published July 27th, 2022. It's called The Aging Student Debtors of America. And of course, it focuses on student loans and senior citizens. This article is rather lengthy. I am not going to read the whole thing. However, I will attach it in the description box so you can easily look it up and read the entire thing if you wish. I'm going to read parts of it, and I've set it up so you should be able to follow the mouse clicks. Looks like this. Okay, I can't see the mouse clicks, but you should be able to see it. And the mouse clicks will guide you as to where I'm at. And of course, this is going to have stops and pauses along the way. I can guarantee you that these stories that we're going to hear about, and again, I'm not going to read this word for word, but the stories that we are hearing about, I can pretty much guarantee you that these older people had every intention of paying off their student loan. And don't forget the dollar amounts that we're hearing about. Some of them, I believe, are six figures. Okay, because I have pretty much read over the article because I had to be able to do this. But even the ones that aren't six figures, even today, when we hear things like older people saying they have, $100,000 in debt, but 30 years ago it was 30,000, and we can sit there and it's easy for us to be critical and judge and go, you couldn't get out of $30,000, but you have to remember $30,000 30, 40 years ago would be like a young person today taking out debt, okay, student loan debt, say at 50,000, and we're looking at you and going, well, let's say you keep it for 30, 40 years, and 30, 40 years from now, somebody says to you, I don't get it. You couldn't pay off 50,000. You made more money than your parents did. What gives? So just like young people today are struggling to pay off their student loans, they say they don't have enough to raise their family, raise the kids, help out the spouse, start that new business, go back to school, whatever. Okay. Just like we are struggling in today's economy to do it, we have people who 30, 40 years ago took out student loans, and they're struggling just as much. My first job when I was 26 was $16,000 a year. Okay. It's all relative. So we have to keep a little compassion before we just sit there and we say, I can't believe it. You took out $30,000 40 years ago. Why couldn't you pay it off? For the same reason, young people today can't pay a $60,000 bill, even though they may be making more than their parents make. All right. So here we go, folks. Again, I'm going to read parts of it. I've scrolled down, and hopefully this will be someone scared straight. I hope it helps. If it helps one person, it was worth all this time. Okay. So happy Friday. Here we go. In 1983, at the age of 52, Betty Ann enrolled in New York University's law school. As a middle-aged black woman, she wasn't exactly the typical NYU, I'm assuming that's New York University, law student. Her white male classmates would slyly elbow her books off the long library tables, and once while standing at her locker, a classmate waved a $10,000 tuition check signed by his father in her face. Betty Ann had borrowed $29,000 in federal loans. Today, hold your breath, she owes $329,000 in student debt. She is 91 years old. Now then, we ended right there. I want you to think about this. In 1983, I was a high school student. I graduated in 1985 from South Eugene High School. So figure I was 83, 84. Okay, so I was in 10th grade because we had 4-year high schools. Okay, so I was in 10th grade. And Betty Ann, Betty Ann, it wasn't much older than me. Okay. So at 52, she's 52 in 1983. Now, some people might say that is careless to take out student loans in your 50s. I'm going to be honest. After having mine for 16 years, I'm going to be of the camp that says when you are in your 50s, you should not be building debt. You should be trying to get rid of debt. Little too late to cry over the spilled milk. Okay. But I know a lot of parents try to take out Parent Plus loans to help their kids through college. And what age are they doing it? In their 50s. And what are they doing to themselves? They're sinking themselves. Even the ones that are trying to do it in their 40s are sinking themselves. So that's kind of scary. And now she's 91, and that debt has grown to $329,000 in today's dollars. Now, how much was it that she took out? Hold on here. I do this kind of casually, folks. Okay. Yeah. She had borrowed $29,000 in federal loans. So $29,000, she's had that a long time. and now it's 329,000. Oh, it's just added another 300,000 to it. All right, continuing on with our reading. Americans age 62 and older are the fastest growing demographic of student borrowers. Of the 45 million Americans who hold student debt, 1 in 5 are over 50 years old. It goes into a bunch of other stats. I told you I'm going to be skipping parts of this, okay? Yes, I would have fallen into that 1 in 5 over 50 if my student loan had not been forgiven. Credit supposes that which we cannot afford today will be able to be paid back by tomorrow's wealthier self. Yes, how many students take out student loans thinking, well, I'm a broke pauper today, but tomorrow I will make enough money to pay off that $80,000 photography degree. I'll be wealthy enough that I will be able to pay off that $200 chiropractic physical therapist degree. I will be rich enough that I will be able to pay off the $150,000, $200,000 nursing degree. Or in my case, I will be wealthy enough that I will be able to pay off $85,000 degree for 2 master degrees. And I hadn't counted that I'd be divorced. See, life kind of gets in the way. So yeah, credit supposes that which we cannot afford today will be able to be paid back by tomorrow. I'm sure we could ask millions of student loan debtors right now in the United States. How's that working out for us? And I say us to include me in it. It didn't work out. My wealthier self was not able to do it. In fact, I got more broke. Okay, so clearly it did not work. But the premise is that, or the idea is that, hey, you take all this debt today, you'll be able to pay it off tomorrow. And how many young people, 18, 19, 20, are told that by their career, student loan, career financial aid office at their chosen school? Oh, don't worry about it. Just go ahead and sign. You'll be able to pay it off, 5 years, 10 years from now. Okay, let's see here. Continuing on, moving down. But the age of aging debtors calls into question the premise of education for human capital. Eroding union density, that means unions, job unions are kind of, the unions aren't as strong today as they were in the 60s, 70s, okay? Eroding union density, declining wages, and skyrocketing tuition have all made college less a path to high-paying jobs than an escape hatch from the worst-paying ones. That's what I tell my students. It's a fancy way of saying the idea is that we were supposed to go to college to get high-paying jobs to avoid being in the low-paying jobs. And what are we finding over and over with student loan borrowers? They're doing the low-paying jobs. One is because the economy sucks, pay sucks in relation to what it costs to live. So all these students who went to school thinking, hey, I'm going to make more money to keep from having to be a Starbucks barista. Nothing wrong with the Starbucks baristas. I get it. Okay, follow me here. Okay, don't take the career personally. Okay, but that's the reason people went to college. They don't want to be sitting there with a professorship degree serving lattes. At least I wouldn't expect you to want that. That's why you went to school. Okay. Let's see here. Those who have taken on debt are increasingly unable to pay it off. Many haven't even received diplomas. The student debt crisis is particularly dire for Black borrowers. Racial wealth gaps mean that Black debtors borrow more to attend college and carry balances for a longer time, effectively paying more for the same degree than their white classmates. And then it goes on into more stats. I'm pretty good at skimming, so that's kind of what I'm doing here. Okay, let's go down. Older student debtors are not exceptional cases within the mounting student debt crisis. Their experiences are, in fact, indicative of its hallmark features. Mounting interest, looming balances, faulty relief methods, and declining wages all force borrowers to carry loans for longer and longer, pushing student debt across generations. Yes, grandma has student debt, mom has student debt, and so does child. Older debtors shuffle their income between credit card bills, house payments, car loans, student debts, often the furthest from their day-to-day lives, get paid off last, or don't get paid at all. Okay, let's look at this sentence right here, okay? Older debtors shuffle between credit card bills, house payment, car loan, student debts. It's not just older debtors, but younger debtors are doing it too, okay? Now then, remember what I've said on this channel, and I've said it multiple times, and I will continue to chant it, okay? As we age, we're young and we say, oh, yes, we will pay off this degree. We will do anything we can to get this college degree. But we say it when we're 18, 19, 20, 21 years old. We're not married. We don't have kids. We haven't had a chance to perhaps live in different cities. We're still reliant on mom and dad. And then all we do is go from being reliant on mom and dad to go and being reliant on the federal government to pay our student loans and our housing. It is easy when we are young to say we are committed to the student loan payment because that's all we have. But what happens as we get older? Oh, yes, other things come into play. And that's what it's saying here. Older debtors shuffle between their income, their credit card bills, the house payment, their car loans. Right. And you've heard me say this on this channel many a times. Student loans get put on the back burner at some point. At some point, you're going to go, look, you know what? I have a special needs child. And what they need is more important than paying Sally Mae. And that's exactly what Sally Mae and even the federal government, may I note, they want you to put the student loan on the back burner because that's how they're getting you to paying, $29,000 for the initial loan. And then what did she have? $329,000 today. And something I read just to think about, I have not researched this, but I have heard, I do not have sources to verify this yet. I have to admit, I'm probably getting this from TikTok University, but I have heard that the government or a private lender can come after the deceased's estate. Now, I do not know if that is true. Maybe if you know if that's true, you can throw something in the comments about that. I might look it up this summer if it interests me enough. Right now it doesn't, okay? But I have heard by rumor on social media, this is what I call TikTok, YouTube University, meaning I got nothing to back it up, all right, that they can come after it. So you're Sally Mae and you gave this lady a $29,000 loan and she still has it from 1983. Think about it, guys. I was 16. No, 15. I was 15, 16 because I graduated just before I turned 18. So figure I was 16 years old when she took out that loan for $30,000. I was 16. I'm now 58. This article is 2022. Now do you see how it grew? It grows and grows. And she had the same intention I'm willing to bet most of you reading her article had, and that is, oh, we're going to pay it off. We're going to pay it. Yeah, but life occurs. And then things happen that become more important. And don't forget, the student loan is the only loan, to my knowledge, along with credit cards. Okay, along with credit cards. They love you to pay less than the minimum. They want you to pay less than the interest so they can just keep stacking on interest. So I don't know how true that is, that they could actually go ahead and garnish your estate, so to speak, but it wouldn't surprise me if they could. Just saying, okay? Let's see. So they shuffle their debt. For aging borrowers on declining incomes, the crisis is acute. Student debtors over 65 default at the highest rate. I'm going to tell you why I think student debtors over 65 default. They say default at the highest rate. My opinion, it's called game over. I couldn't pay this off in my 20s, 30s, 40s, 50s. I'm now in my 60s. I'm unable to work full time anymore. For whatever the situation. Guess what? It's game over. I don't care anymore. And I'm using the nice words. You can fill in the expletives as you wish. That's why I think the default rate is so high. See, when we're in our 20s and 30s, we also have a lot more to lose in our 20s and 30s. Okay, I don't care what TikTok says. Yes, going into default will affect your car insurance. It will affect your ability to own a house. It will affect or just property in general. It will affect your ability to be able to get certain licensing. Yes, you can't get licensed security clearance. I have a gal pal who works in security. And I'm gonna visit you sometime in your state also, okay? She knows who she is, okay? But she and I have discussed many times, all right? And she lives in tornado land. But we've talked about it. I know for a fact that with a lot of student loan debt, there are some jobs they look at you as too risky. You have to be able to pass a security clearance, not just in crime, but in how much money you owe and how well you keep your debt in check. And knowing that you're under garnishments, knowing that you have collections and all of this stuff can hurt you. So yeah, I can see exactly why. 65 and older, game over. Take what you want. And not only that, they don't have quite to lose anymore like the young people do. Think about that. Yeah, okay, garnish 15%. Years and years of erosion on labor rights has meant that wage power has not kept up with the student debt. As such, student loans don't take people out of the working class. They merely change the accounting of people living within it. 50-year-old David Ormsby, for example, had been working at a Home Depot in Detroit for 8 years when he decided to go back to school. Now, remember, he's 58. Again, I want you to think about, is there a pattern here with people going into debt at 50? In your 50s, you should be clearing it, not building it. That's just my personal opinion, unless you have the financial means to pay that education bill off in full without hurting other areas of your financial wealth. In other words, you're not dipping into your 401k to go get a $50,000 degree. Okay. So we have here David Ormsby. He's working at Home Depot for 8 years when he decided to go back to school. I wouldn't call it a dead end job. He's talking about Home Depot, he said, but he felt he wouldn't be able to advance without a higher degree. In 2005, he began studying part-time at a local university for a bachelor's degree in supply chain management, while also raising his 2 sons and working more than 50 hours a week. Today, he holds close to $90,000 in student debt. Oh. The degree helped him secure an auto manufacturing job with higher earnings and more satisfaction than his previous work. Still, the $500 monthly loan payments are hard to manage. Ormsby has begun working a second job delivering groceries to make his loan payments. Going back to school was a good thing, Ormsby said, but he's frustrated that he will be in his 70s before he will be able to start saving for retirement. Okay, there's the dude. This is all on public media. Okay, I'm sorry, but I try not to move the screen because it makes people's eyes go wiggy wiggy. Okay, and I don't blame you. All right, I'm going to poke holes in this, but I'm doing it in a way that I hope is lovingly critical. Okay, he's in his 50s. He finds that he's working at a job at Home Depot. Have you really advanced yourself when you go back to school in your 50s to take on student loan debt you cannot afford, to get yourself $90,000 into debt to have a $500 a month payment? I'm thinking, what would have just happened if he had just taken on a second job somewhere else and kept the money? See, this family, this is where I failed miserably when I went back to school to get 2 master's degrees because I wanted a master's degree in education. I didn't do the math. I didn't do it. And he talks about he has emotional satisfaction. He says here, more satisfaction. Hell, for $90,000 student debt, I'd rather be miserable than satisfied. If somebody said, Carrie, would you rather be just a little bit more miserable in your job and not take on $90,000 worth of debt? Or would you rather have the $90,000 worth of debt, the $500 a month that goes with it? And would that make you happier? Sometimes we have to put aside our personal satisfaction if we know our butt's just going to get chewed up in debt. And in some ways, I'm not saying he's more sad. I'm not saying he's not more satisfied, but I'm going to say this. If you had just spent all that money to go back to school in supply chain management in your 50s, you better say you're happy. Otherwise, you're going to be sitting there crying every night going, well, that was a dumb decision. And I'm not calling this a dumb decision, but I want you to think about it, okay? In your 50s, supply chain management, you're in your 50s in a corporation. What are the odds that it's going to be successful? I'm going to say unlikely. Because of the fact that 50s in corporate, yes, I know it's Home Depot. Home Depot is a corporation. We don't like to think of that, but yes, it is. Okay, it's a corporation. Corporations, your 20s and 30s and maybe your early 40s to mid 40s are the most ideal ages for advancement. And once you start getting into your 50s, guess what they start doing? They start looking to move you out, downsize you, whatever. Yes, there are people who manage to retire very successfully up the corporate ladder, yada, yada. Okay. But for the majority of people, no, that's not going to be the case. They're going to start moving you out. So here I see a lot of holes. And I just think to myself, what would have happened if he had just gone and worked at Lowe's? Remember, he's experienced at Home Depot. He could have gotten a part-time job at Lowe's Okay, assuming they didn't have a non-compete clause. Otherwise, just go get a part-time job somewhere else. And he could have kept all that money. He's working all these hours to just give it to the student loan people. What type of advancement is that? It's not. Remember, you have to take away the cost of your education from the so-called profit that you got to really figure out what you earned. And I'm going to say he didn't earn it. I'm going to say he's actually in the hole. It's like people who drive for Uber and they go, and I make $2,000 a month on Uber. Meanwhile, they are beating the heck up out of their vehicle. And for some reason, that never seems to be a factor into the $2,000. I drive my car approximately 15 miles a day. If my car drives 20, we went a long ways away, like down to the airport mall and back. Okay. What would happen to my vehicle if all of a sudden I said, you know what, I'm going to start driving for Uber all summer long and I'm just going to run up thousands of miles? I could run up in the summer, literally, what it equates to over 9 months in a school year. If he really, really looked at the hard numbers, this was a horrible financial move, and he's not going to have it paid off until he's in his 70s before he can start saving. Okay, look it down here, folks. I'm clicking on it. I can't see the clicks, so I have to trust that when I film this, upload it, you can see it. I did a test run. It says you can see the clicks. Okay, he will be in his 70s before he can start saving for retirement. So that means you're going to retire broke, or you're going to work till you're 80. I guess that's the other option, right? Work till you're 80. Oh. Look at, I wonder how much that truck must, is that a truck? I can't tell if it's a truck. Looks like an SUV type truck. Okay, moving on. Although most older student debtors have borrowed money for their own education, approximately 1/3 have taken out loans on behalf of a child or grandchild. Unlike direct federal loans, which have borrowing limits, parents can take on virtually infinite amounts of debt, up to the full cost of attendance each year to finance their children's education through Parent Plus loans. Parent Plus loans often come with punishing terms as significantly higher interest rates. They have scant options for relief. And Parent Plus recipients are only eligible for one type of income-driven repayment program, blah, blah, blah. Okay, some parents are stuck paying for loans even if their child dies. Yes, they are. And you have to look at the terms of the Parent Plus loan before you sign. I'm not going to get really big into that. But yes, it does happen at times, probably more times than we like to admit. Student debts can plague borrowers until their last breath, jeopardizing even the government's meager protections for those of old age. Social Security defaulted student loans can trigger the Department of Education to command garnishment for tax refunds, wages, and Social Security. Disability too. This should be this should not be news to anybody at this point. Okay. In 2015, so 10 years ago, more than 200,000 student debtors over the age of 50 had their Social Security garnished. Did you hear that? That was 10 years ago. And people think that Social Security garnishment doesn't happen? Or they go, oh, it's not going to be a big deal when it does. That could be the difference between you being able to afford food or not. It could be the difference between you being able to have modest transportation affordability or not. Because remember, you're retired. There's no new money coming in. So every penny counts. Okay. See, regarding Social Security garnishment, one of them was Olivia Faison. I'm just going to call her Olivia because I think I'm butchering her last name. A retired analytical chemist who is now 71. Olivia studied biology, chemistry, and music at Queens College in the early 1980s. Again, I'm a high school student. Oh, early 1980s? I was in middle school. I'm a middle school student, okay? So that for me, that'd be 7th and 8th grade, 9th grade. I was, quote, Olivia says, I was very fortunate to be able to get a college education on very little debt, receiving scholarships that paid for the majority of her degree and and borrowing approximately $9,000 for the rest. Okay, so she borrows $9,000 to go to school. Again, I'm a middle school student. Upon graduating, she worked in a private industry for several decades, but when her company downsized in the early 2000s, she was laid off. As an older black woman seeking a job in the science, Olivia struggled to get her foot in the door at other companies. Many prospective employers required her to submit her undergraduate transcripts as part of the application, but because she still owed money from her undergraduate degree, that $9,000, okay, that $9,000 from Queens College, refused to release her transcripts. Wow. My way of getting employment after 2001 was very inconsistent, Olivia said. She worked mostly temporary jobs for the next 13 years as her income dwindled and her loan payments became sporadic, meaning she didn't pay her student loan regularly. Now, I want you to think about this. We think it's just the poor people. We think it's just, the everyday middle class, okay, family that's struggling. This woman had a scholarship. Let's put race aside, okay? She had a scholarship to Queens College. $9,000 was her debt. Now, again, we have to think in terms of what it was when I was a middle school student. What would $9,000 be today? It could probably be like $50,000 today. I don't know. I'm not good at transferring numbers. But again, we're thinking in terms of that time period, okay? She wasn't able to pay that $9,000 off. So she winds up having her loan garnished. By the way, CUNY, that's the Queens College, whatever, ended the policy known as transcript ransom. So some schools, including the school that Olivia went to, no longer hold your transcripts for ransom, meaning even though you owe the school a debt, that they now will release your transcript so you can get a job. Because it does seem kind of stupid. It's kind of like jailing people that owe money. If we put you in jail, if we take away your driver's license, and if we don't give you your college transcript, how is any of that going to help you find a job? Especially the college transcript one, considering there was nothing criminal there. Scrolling down. Oh, there's her Queens University. There she is. Okay. So Olivia, she took her retirement as soon as she could, scraping by in a combination of food stamps and Social Security payments. Doesn't sound to me like she should have retired at all. I am so thankful that for all my financial failures, that I was smart enough in my 30s to know that I needed a retirement plan. I knew I was going to need one. And I knew that if I wanted a 30-year teacher pension like my parents had, I knew I would need to be a teacher by the age of 38. So I could retire at 67, 68. That would give me 30 years. I got a job 3 weeks approximately before I turned 38. My parents taught me well. That was one area I can honestly say was a home run, planning my retirement as far as pension. And it's very valuable, and I'm aware of that. And it's the one smart thing that I did, and I followed what my parents did. And fortunately for me, teaching happens to be my dream job, so that really, that's like a home run, The job that has a pension is also my dream job. Supports the family business of being educators. Okay, so it says here she took retirement as soon as she could. I don't think she should have taken it. I hate to say it. I think she should have kept on working. It is what it is if you don't save, okay? Olivia knew her debt had reduced her Social Security benefits. Her last decade of her earnings were her lowest. But she was shocked to learn that the outstanding student debt had enabled the Treasury Department to garnish around 10% of her roughly $1,000 security. Excuse me. Let me repeat that again. She was shocked that the Treasury Department garnished approximately 10% of her $1,000 Social Security payment since 2014. It was just plunder, she told me. So her freaking Social Security is only $1,000 a month. And they're garnishing about 100 of it, would be 10%. So that'd give her about $900. Wow. Olivia set to work contesting the offsets, meaning she was not happy about having to pay the garnishment, basically. She dug through complex government websites, made phone calls, sent letters, yada, yada. Okay. With the help of legal aid, she learned that the collection agency, Coast Professional, did not consider her eligible for hardship exemptions because a judgment had been rendered against her in the late 1980s. In other words, this woman had a judgment. She didn't even know about it. I wonder how many current student loan people right now, okay, I'm talking millennials, what's after millennials? Gen Zs, okay? How many of them have judgments and don't even know it? It is possible that you can have a student loan judgment against you and genuinely not know it. Okay. So we can't shame her for that because I genuinely believe it could happen to someone today. Let's see. So she has a judgment against her. This was news to Olivia, who had not been informed of a proceeding held against her. Oh my goodness. And then no more information could be found. She wrote a letter to President Obama and basically nothing was said. So she owes it. Here's the thing. These judgments and stuff and the wage garnishments, I think young people don't take them as seriously as they should. I mean, literally, you've got people on TikTok, and don't worry, we've got more student loan debt stories. Okay, don't worry, the student loan debt TikToks are coming this weekend. All right, we have people who are literally going, "Oh, it's okay, just let them garnish, just let them, take the money. I'm not paying it." But as we know from some of our writers on this channel who have informed me, because I didn't know it, okay? And I think it was Jamie who said it, and that is judgments can't, a wage garnishment, your employer can charge you for it, okay? I don't know the ins and outs of it, but I think a lot of these TikTokers going, "Hey, I don't care, just let them garnish because I'm not paying it." Well, you're going to pay it. And it's now going to involve your employer. It could potentially involve your employer charging you for it because it's extra work on their part. Okay. We just don't understand. I think a lot of young people just don't understand the seriousness of it. It's kind of like, follow me to jail. Okay. So here we have another story of Ian Fitzpatrick. So we've moved off Olivia and we're on to Ian. I have to say that because I'm sure some people are listening to this as a podcast. All right. So Ian Fitzpatrick is a 57-year-old lawyer with roughly $84,000 of student loans, jokingly calls his student mortgage. So Ian Patrick, 57, I'm 58. This article was 2 years ago. So we're pretty close to the time period. Just back it up a few years. Okay. Had the same amount of student loan that I had until mine was forgiven in 2022. And he's a lawyer, and Ian couldn't get rid of his debt either. So you wonder, the lawyer can't get rid of their student loan debt. Obviously, Ian could not get rid of it because Ian's in this article. So how do you think a single school teacher is going to get rid of $85,000? Ian and I basically had the same amount of student loan debt. Okay. And our assumption is that lawyers are what? Rich, wealthy, or at least they're very well off. Not all lawyers. Okay. You should have seen some of the offices my bankruptcy lawyers worked in. I don't think they were very wealthy, judging by the office. Okay. But I digress. All right. So Ian is a 57-year-old lawyer with roughly $85,000 of student loans. But at least with a mortgage, one can walk into a bank and request records of the initial amount borrowed, number of payments made, the remaining balance. The Department of Education, effectively one of the country's largest banks, thanks to its $1 trillion student loan portfolio, is unable to provide such accounting for its 45 million clients. So in other words, the student loan, and I know a lot of you already know this, call your student loan company and say, "Tell me, how did you get to that balance?" And they can't tell you. That's what that whole paragraph is basically saying. They can't tell you. I think we would be shocked if we actually got to walk into the Department of Education, and other than the fancy outside of the building, we might be surprised to go back to the 80s and look at, oh, this is how you are holding onto our records. When I first worked in a library, and I was at the Salem Statesman Journal in Salem, Oregon, that was my first real job, okay, so to speak, and I was a librarian. The way we kept it, now remember, the internet had not been invented, and it was only coming around about a year or two before I left. They said this thing, they were like, this thing on a computer, you'll be able to look it up and you can see different places and read other newspapers. It's really when the internet was just being used for reading, and it wasn't all the buying and selling and trading that we see today, okay? Keep in mind, I'm 27, so you're talking 30 years ago. To keep track of the newspaper, you think we'd have some fancy system? No, I hand cut the articles out. Okay, literally. Okay, this is my newspaper. Okay, I would cut out the article, stick it in an envelope, and when I cut out the article, I had to make sure that the reporter's name and the date was attached, and then I would type with a typewriter onto the envelope. Okay, these were the stories. Let's see, what is it today? It's I would write. Today is, I would write something like May 23rd, 1989, whatever. Okay. That's how the stories were kept. There was no computer system. And God help you if somebody came in, took out an envelope of a particular day and did not bring the envelope back. God help you, because we had no way to find it. It's kind of like when someone goes to the library and they take a book and they take it off the shelf. And I'm always like, please put the book back where you got it. Or if you really don't know, just leave it on the table and I'll put it back. Because once you pull it and you put it in the wrong spot because you're too lazy to go ask for help or whatever, okay, that's how we kept it. So when we talk about the Department of Education and they can't give you accountability for the records, are we really surprised? I don't think so. All right, let's see. Let's go down, down, down. We're going to scroll. I tell you, I don't want to read this whole thing. Let's see. The debtors that I spoke with, this is now the author, okay? The debtors that I spoke with, many of whom I met through my work with the Debt Collective, find the system both impenetrable and humiliating. Yeah, I bet. Okay, they're talking about the student loan system. You know, you can't figure it out. And the way that people feel at times is they feel insulted, meaning the borrowers feel insulted. Several grimaced when I asked if they would be willing to share their names, unaccustomed to speaking publicly about debts they've carried silently for years. You know, I wonder how many people right now have grandparents that have student loans that they don't know about. I had no idea great grandma or grandma had student loans. But I'm hoping that with channels like this and other channels and student loan news being out in the open and everybody talking about their debt, whether it be credit card, student loan, whatever, okay, that it's not so shameful anymore and it's not something that has to be hidden. But I can understand perhaps from their generation and stuff, they may be thinking, you know, this is embarrassing. But I'm hoping like channels like this make it much more out in the open. In fact, I have a few people that I talked to from this channel, and they kind of let me know where they're at in their goals. And I appreciate that trust. Okay. And of course, it never gets outed on this channel. All right. But confidentially, they let me know. No, here's where I'm at. This is my goal. All right. But can you imagine if you were a grandparent at this age, you know, and you've never told your family that you owe all these thousands of dollars in student loans? And I think the fear is that they would think that somehow or another you were less than, or somehow or another you had failed. And I think we need to stop looking at student debt like a failure. And instead we need to look at why is it that it's failing? And really, to me, it's that income-based thing. Okay, it's that income base, it's lack of education about what the degree is really going to pay. It's false information that they're being given in the financial aid office that this degree is going to pay for itself. There's so much stuff to factor in. And that's why we need to bring it out into the open. Okay. So anyways, let me go on, scroll down. More people that owe debt. You can see the age they are. These are your great grandparents. Okay. And maybe even sometimes great grandparents. Let me see if there's anything else on here. Okay, I think that's pretty much of everything I want to read on that. This has gone on long enough because you know me, on this channel, the motto should be, for we make a long story longer. Thanks for joining me, guys. I'll see you tomorrow with TikToks on, of course, student loans. Bye.